Hi everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on your screen that'll be featured in this recording. And if there's a particular stock you're interested in, you go directly to it using the chapters feature in this video. All right, let's take a look at the market. We'll look at the S&P. Ugly tape, as they say today, pretty much everything to the downside. We'll talk more about that in a moment. But what I wanted to highlight is this zigzag pattern that we said was at least qualified. It's almost confirmed, not quite, but we're getting there. We need to take out that A wave low to be qualified, but or to be confirmed. But we are qualified here, so we bounced down from that B wave at the roughly the 38.2% fib level, which would be a 61.8% extension, and that brings us right down to that support area around 540. Some of you are saying, "Gosh, I hope we don't see 540 on the SPY." Well, we might with that down day today. A thing to look at here is that on the low, we close on the low of the day, which is pretty separated from the 10-day moving average. So we did close a tiny bit oversold. Maybe we try a bounce at the beginning of the week next week. We'll just have to wait and see. I did want to show you, brought this up last week, one of the cool things about this software. And again, if you haven't gotten a copy of this software, go to hubb.com. I think it's the best Elliott Wave software out there. I know a lot of you are starting to say you're newer to Elliott Wave and you're liking it, etc. Some of you have gotten the software and saying that you really like it. A lot of different things that you can do with it, but not only do you get Elliott Wave charts for free, you get free live Elliott Wave. But another thing that you can do is you can change the data points, which I just did by hitting this little toggle thing here. So basically what it says is that you're asking the algorithm, and this is a software program, so it's programmed to the Elliott Wave algorithm to look at just the last 100 bars. I keep it on 377 normally. That's in the Fibonacci summation series, 1, 1, 2, 3, 5, 8, 13, 21, etc. Add the previous two numbers, gives you the next one. That's the summation series. You'll get up to 377 eventually. I try to keep a lot of things in that fib series, but you can change it to where not looking at that many points, just analyze what's going on short term, almost like an exponential moving average does, where it puts more emphasis on what's happened recently. And you can see it does have a wave 3 labeled here. There's that zigzag pattern that I had on the larger chart. And the issue is, the thing that's interesting is that wave 3 is still green, not purple, which means the algorithm is not sure the wave 3 is done, which leaves a little bit of doubt. It has not labeled this point as a wave 4 yet. It may do that in the next day or two, but for now it hasn't, which means that we could still be in a wave 3 to the downside. So this could be a complex wave 3 with this zigzag in it. That's still a possibility. But yeah, we do have the chance of going down and hitting that 540 level. So let me go ahead and bring the Elliott Wave count back to the 377 where I keep it for most charts that I look at. And we did have some economic news that came out today. The PCE report came out, which is part of what sent the market down. We had opened at the high of the day and traded on the low, closed on the low, as I mentioned. And that came in a little bit hotter than expected. And some of the issues were within there. Consumer confidence down. We had the consumer confidence board number showed lower readings in the PCE. It was the lowest since 2022. So that wasn't a good time, right? You can imagine at the end of the pandemic, consumer confidence was pretty low. That's where we are now. We did have personal income up and quite a bit up at 0.8, but personal spending was only 0.4. So people are still doing okay. The job market is still okay. They're making money, but they're not spending it. So the consumer's not spending. So if the consumer pulls back, we're a consumer-driven economy, that's problematic. And so that led into the market moving to the downside. Again, if we go back and look at the chart of the SPY, you can see that there was the open right there at the 10-day moving average. And we pretty much started selling off. We had a couple little sideways blips intraday throughout the day, but and then closing on the low, there was really no significant buying attempts that came through. And part of the reason is I think this keeps the Fed on pause. Where's the motivation for the Fed to cut rates? We had a slight 25% chance of a June rate cut. I still think that's a bit aggressive. I think the Fed's just going to sit on their hands and wait till they get more data. Let's look at the VIX. So when we take a look at the VIX, we came down to the 17.5 level and bounced back up. Still not a crazy spike. We're up to 21 and change right now in the after hours market, but nothing like the spikes back to 30, which makes you wonder, do we need a really bloodbath day and a big, huge spike in the VIX, or was this enough? We contemplated that with this unusual trending move up, but it did go a little vertical, and you know the rules. What goes vertically up oftentimes comes vertically back down. Anything that gets too far from the 10-day moving average won't stay there for a very long period of time. No security in any time frame gets too far from the 10-day moving average. You've been watching these recordings. You know all these rules that I talk about week in and week out because they work and they matter. I'm going to jump over to the bond market real quick because that has been odd all week, and then we'll come back and look at the other major markets here in the U.S. But you can see we actually ticked up in prices here on TLT. And remember, prices and yields move inversely. So the TLT does show prices on the 20-year. So if prices go up, yields and rates go down. Kind of weird that yields and rates went down on a day that was so ugly. And yet on these down days that we had in price with yields bouncing up, didn't seem to hurt the market so much. So the bond market and the equities market are not in alignment at this point in time. That'll change. They'll get back into congruency here, if you will. But right now, it's the tale of two different markets between the bond market and the equities market. We did have this symmetrical triangle. We talked about how well that five-wave pattern was. Go back and watch some of the previous recordings. If you're watching this for the first time, the TLT is just a poster child for Elliott Wave. Couldn't be a better example of how well Elliott Wave works. Wave 5 finishes, you go into a corrective phase, flat zigzag or triangle. We've got two triangles here. So the bond market's trying to figure out where things are going to go. There's uncertainty. We got the tariff stuff. We'll get past that finally next Wednesday when April 2nd rolls around. That's going to be a wild day, I think. Intraday, that could be some really interesting volatility during that day. But kind of odd that rates actually ticked down today. Is that the bond market is starting to say that we are going to see some weaker economic news and maybe weaker labor market? The Fed has said that they're not going to think about anything with the economy or the markets other than the labor market. So if the labor market begins to weaken, maybe the bond market is trying to say they think that's coming, and that could move the Fed. But up till that, we just have to wait and see. There's TNX. I know you like that. It's basically the exact same chart, just reversed, because TNX shows rates where TLT shows prices. Same double symmetrical triangles here, breaking to the upside in rates. It'll show after 8 p.m. when the exchange sends the new data for the end of day. TLT will show the live prices. TNX shows end of day. You'll see that tick back down. So is that a false breakout? We're just going to have to wait and see what happens with rates at the beginning of next week. So pretty interesting stuff. Let's go ahead and take a look at the Dow. See what's going on in the other markets. They've been kind of, other than the Qs and the IWM, pretty much in alignment with each other and still are. You can see this move down with the major move being on the DIA that we did break above resistance at 420. We got up, got close to testing that 50-day moving average. But then we turned and rolled over and moved back to the downside on the DIA. So all the markets, like I said, they call this a bad tape when pretty much everything is red and going to the downside. We take a look at the Qs, and you would think that rates would have hurt them. It was interesting that we did have a little tick up in the Qs, even with rates moving up a little bit. But look, we have a big down day in the Qs on a day when the rates went up. So not even tech stocks could offset the selling that occurred today. And we had this ascending triangle. We broke out. Thought we might get a little closer to resistance there at 500 on the Qs in the 50-day moving average, but we didn't make it that far and reverse. So perhaps this is a false breakout. We're moving lower. It's not a very big triangle, so it doesn't foretell much of movement. So that might be all the breakout that we get on the Qs. And then the IWM, which, my goodness, it's just a rough place to be in the small caps. Even though at the beginning of the year, a lot of people were saying the small caps are the place to be for this year. Not so much. We had this really nice zigzag right at a 50% B wave correction. That's going to yield 100% extension. And then you usually get a bounce towards the previous fib level if you're going to have an extended level. If we get follow through on Monday, because we did close below the 200 level or right at it today, if we get follow through to the downside on Monday, we may be looking to march towards that 161.8% extension on this zigzag pattern on the IWM. It's going to take something significant to change. Small caps are viewed as being a bit more aggressive, and nobody's feeling too aggressive or speculative with their positions right now. Everything is caution, which I think may tell us why the bond market went down today. It might have been just a flight to safety. The money going into the bond market made the prices go up and yields and rates go down. That kind of makes sense. Let's go ahead and take a look at the metals. We'll take a look at GLD, and you can see here gold continues to move higher. Why is gold moving higher? Well, the interesting thing was, why was it moving back up when rates were going up? Today makes a little more sense. Rates went down. The next move of the Fed is likely going to be a cut whenever that happens. So, yeah, I do think there's a little more room to run. I was asked that last night in our insiders meeting for alert subscribers at evotrader.com. Do I think there's more room to run here? But we are at the 61.8% extension. So we have a little zigzag here, right to the 38.2% corrective level on the B wave. That yields a 61.8% extension. So we're there. Not quite a doji, but some indecision. Question on whether or not gold continues from here is a viable question. SLV, which we said needs to play some catch up. It's really trying. Open higher, but then closed near the low of the day. But yesterday was a big, nice day to the upside on silver and SLV specifically. So it's trying to get back in concert with GLD, and they will be at some point in time. They'll move back together. But today, maybe the tech stocks having a hard day applied more to that than it did GLD. But we are in the tap box too, and we're right in the middle of it. So both gold and silver are at points, even though their charts are slightly different. Both of them are at a point of potential resistance here. As we move to energy and look at UNG, and gosh, we've been talking about UNG every week during TradeFinder. And by the way, if you haven't registered for TradeFinder, you can do so with the link that's provided on your screen. We do it every week at 1 p.m. Eastern time on Tuesdays. It's free. We talk the markets. We look for trade ideas. We have a live Q&A, and just go back and look at the record that we've had. We had a perfect February. Every trade consideration we looked at was a winner. And there's a great community there. Ask great questions. So join us. Again, it's free. So take advantage of it by signing on to the link there. All right, so back to the chart of UNG. You take a look at that. We know we had this bid. I've talked about that. I don't want to recover that because of the fact that all these data centers are going to be being built. They're going to be using natural gas. So we had the bid, and then the questions of, well, how many are there going to be? How long is it going to take to build them? How much natural gas are they going to use? And all of a sudden we're like, oh, it's too many questions. And we came back down, but we held the 50-day moving average on the low for 3 days. Got a little bit of a bounce back to the upside today, even though there was some news that maybe there aren't going to be as many data centers built as initially thought. But just correction back to the 50-day moving average at least gave us the bounce today. Once again, we'll see if there's follow through or confirmation to that move back to the upside on Monday. But for now, nice day off the 50-day moving average. And we have this zigzag pattern here. We got almost to the 61.8% level. And people can say, well, that, it almost got there. It's just been my experience. Normally the fib levels get touched. So maybe we go back up and actually get to that 61.8% level. But again, we'll need follow through at the beginning of next week to start thinking about that. If we move to oil, oil's just kind of doing exactly what we thought, staying within this big trading range. I think that's where OPEC wants it. It's kind of in the sweet spot where oil prices are slightly elevated, but not to the point where it's going to hurt demand. They don't want to do that. They don't want to kill demand because they rush everybody into electric vehicles. They won't get those people back. statistics show that people that have bought electric vehicles tend to keep them. Other than the whole Tesla stuff that's going on. We'll talk about that a little bit later on. But oil ticking back down, tried to open higher, but then came back down with the market. And I just think we're in this big trading range throughout the rest of the year. We could test 80, we could go down and test 65, but I think in this area is where we're going to stay. Again, I think that's the sweet spot for OPEC. I know President Trump, drill baby drill, wants to create more domestic production, but OPEC said, yeah, go ahead, but we're just going to cut production over here for the amount that you increase there in the U.S. So I just think we're range bound for a while on USO. We'll see if that changes. But if the consumer stops spending, you might see this start to come back down a bit. We'll have to see. We broke out of this little small triangle. You know the triangle rules by now. You break out of a triangle, you come back and test the point of the triangle. It's just like a gap. We don't know exactly when the gap's going to get filled. It could get filled right away. It could take some time. But maybe we're going to work our way back down to this 72.5 level there on oil. All right, let's move to crypto land. We'll take a look at Bitcoin. And we adjusted this last night where it looked like maybe we were breaking to the upside out of this symmetrical triangle here. But what we really did was just create a few more lower highs and a larger triangle. And then you can see the move today, totally risk off day. Guys in the market talk about risk on, risk off. This was definitely a risk off day. And we broke to the downside here. So all eyes will be on Bitcoin over the weekend to see if we continue to follow through on that downward move. If so, we're probably coming down here towards 75,000. Hopefully that holds if you're long cryptos. We'll see if we get a reversal over the weekend to show that this is a false breakout. But that's a pretty significant move out of there, and it's taken out kind of these lows here. So that's a bit more of a tell than we had this upward move and then followed that through with lower highs. So again, a larger triangle on Bitcoin. As we move to Ethereum, and as you can imagine, poor Ethereum just can't get out of its own way. We were hoping maybe go sideways here and then move down, but this is a classic stair-step pattern. If I condense the chart a bit, you can see that we went down, sideways, down, sideways, down, sideways. It's just a stair-step, and you can have that same pattern to the upside or the downside. And we were trying to go sideways here, consolidate with Ethereum, perhaps creating all those ETFs was the kiss of death, because where's the buying coming from? Doesn't seem to exist. Certainly way underperforming Bitcoin. And then this tick down today may mean that we're looking at 1,500 there on Ethereum. XRP, I know that's the one you all like, so we'll take a look at XRP. It's been holding in there better than the other cryptos, but even it went down. So everything on the crypto space down today. Based on that risk-off type environment. And this is a pretty nice triangle here on XRP. So if we continue to break out, we could be looking at $1.50 again on XRP. But once again, we'll watch over the weekend to see if there's any follow-through. Sometimes the market gives head fakes. That's why we have the rules for a follow-through or confirmation day. Market likes to do that, get everybody leaning one way, and then the market reverses and goes the other way. That's what needs to happen in the crypto space, or we're going to continue to go lower. Solana, another one y'all like to look at, kind of staying in this range, even with the down day today. It also had a down day. It does have a 5-wave to the downside pattern, but just barely the wave 4 right at the 23.6% fib level. Even Elliott himself didn't have a whole lot of faith in that. So we'll see if Solana continues lower. Perhaps we're coming down to this next level of support. Does seem like at least we're going to test this again. Same thing here with Ethereum. We went sideways for a while, hoping for a bit of a bounce, but it just couldn't overcome what occurred in the market. And then Cardano, which is the one that surprised everybody, that was in the basket of current cryptos for the strategic reserve, had this big, massive 60% up day, right back down, also forming a bit of a triangle here and trying to break to the downside. So really not much for the bulls in the crypto space today. Pretty rough day all in all. All right, as we take a look at some stocks of interest, we'll take a look at GDX. And on GDX, there was a question from last week if I would cover that. And we actually had an alert for our alert subscribers at ewotrader.com on GDX, which I took off earlier today, looking like maybe we're getting just a little bit overbought here. A little separation from the 10-day moving average, with both gold and silver looking like they might be running out of steam. GDX has done a pretty decent job of following the metal. They don't always, because they're miners, they're their own companies, and just because the metal, the underlying metal is going up, doesn't necessarily mean the company's well run. And this is an ETF of gold miners, but it came back down. But you can see we went to the very top of the tap box here. Time and price projection is what that stands for on the wave 5, right at 100% extension. So that might be the end of things for GDX as well. So a little bit of caution here across the board in metals and on GDX. Before I look at CELH, while I'm talking about stocks of interest and the comments from you guys, just a reminder that each and every month this year, we're offering a free level 3 subscription. And that includes our time strategy, which is sideways. We do calendars, butterflies, things that generate income from volatility on stocks that have moved sideways. The AI tells us it's going to stay in a standard deviation range after the drop. Then the volatility strategy, which is all those triangles that I talk about. Have a very unique way of doing them. It's kind of my claim to fame in the world of options. And then our AI-based impulse strategy, which is a directional-based strategy heavily focused on zigzag patterns within the wave 3. If you look at our websites, we're thousands of dollars. We're giving away one free every month. All you have to do to register is leave a comment underneath this recording. But as a reminder, you need to be a subscriber. We're trying to push towards 50,000 subscribers. So hit that subscribe button. I know a lot of you did it last week. Appreciate it very much. You know how all this works with the YouTube algorithm, etc. But we do want to hit that 50,000 subscriber number. So if you haven't, hit that subscribe button. If you know anybody that you think might enjoy these videos, recommend them as well. Post a comment and you're in the drawing if you're a subscriber. So looking at CELH, thanks, by the way, we appreciate it very much. Going back to CELH, we had this wave 4 bounce up just past that 23.6% level. The positive here is the fact that we did hold above the 10-day moving average. So with an ugly tape on this Friday, at least that's some little bit of consolation. We got tiny bit above the 10-day moving average, so we needed to come back towards it. The negative side is that we are at a point of resistance. Last time we looked at it, we had the line over here. Another cool thing about the software is when you look at a chart and draw lines on it, it remembers it. So you don't have to redo them every single time. You just bring up the chart and it reminds you what you looked at last time, which is just, I mean, that's a really cool feature so that you get an idea of, okay, here's what I was thinking here. How did it play out? So moving back down, if we can hold above this 10-day moving average, the wave 4 is still green, so we could move higher. We could go up towards this 37.5 level, but we're going to have to see at the beginning of next week if we can stay above this 10-day moving average. Again, the concern is that we have this resistance here at 35 that goes all the way back to October of last year as resistance. So we need to break above that. If you're bullish, again, positives, you stayed above the 10-day moving average. And also, you don't want to break above a major point of resistance when you're already slightly overbought, because those don't hold. So going sideways under a point of resistance and then breaking is better. So if we can reverse and head back to the upside, that's pretty positive for this chart. So the beginning of next week is going to tell a lot on CELH. Nvidia, take a look at Nvidia as we always do. This movement to the downside here. Got a nice little zigzag forming in Nvidia. And Jim Cramer mentioned, take it for what it's worth, that all the zero DTE guys, that's zero duration to expiration, 0 days to expiration, are wanting to push Nvidia down. For some reason, they've all ganged up on Nvidia, and they're trying to push it lower. So that B wave right underneath the 50% correction. Gosh, could you imagine Nvidia breaking below 100? There's a possibility of going all the way down to this 100% extension, which is just below 90. But it does seem like we're headed back down to test this A wave low and perhaps test that major round number of 100. I think that should provide a little bit of support if we do make it down that far. tiny bit oversold, but not too much from the 10-day moving average. So pretty rough going. And it's going to need the market to turn around because obviously just interest rates moving down weren't enough. But potential more downside there for Nvidia. And then looking at PLTR, I'll change the chart and bring it since they changed exchanges. We need to bring up the new chart of PLTR. And we had a little bit of a move to the upside, but that's been quickly reversed. And we're back down, but we have this core of support here right between 80 and 90. You can see we closed at just over 84, but we kind of need to hold there. If not, then we could be looking at all the way back down to 60, believe it or not, or just above 60 on PLTR. So really needs to hold this level at the beginning of next week. You can see it was resistance back here in December and January. We had the big break on earnings, consolidated into this ascending triangle, tried to break up, but couldn't do it, right back down. But this is a pretty solid little corridor here above 80. If we can hold here, then maybe we can try another bounce and see what happens. But not good if we break below 80. It's not quite a Katie bar the door, but we could be coming down to this level here of potential support. Just call it 65 maybe on PLTR if that continues. And then Tesla, a lot of people asking about Tesla. Again, you've read all the news, all the people concerned about Elon's time with Doge, et cetera. Does he still have his eye on the ball? And also people talking about they're not really buying Tesla. We had this little triangle here. Small triangle right between support resistance. I mentioned that I don't think you want to go long Tesla unless we can break above 250. You don't want to short it unless we break below 200 either. So we're just in this corridor of wait and see. We did get an upside breakout from this triangle. It went exactly to where it's supposed to go. You measure the width of the mouth of the triangle from the point, and that's where it's supposed to go. So we had the breakout. And again, the triangle rules. Normally after a triangle breaks out, it comes back to the point of the triangle. Again, we don't know when. Sometimes it happens rather quickly. Sometimes it takes a while, but perhaps we're going to come back down there. But if you're bullish on Tesla, we have held support, at least for today, at 250, and maybe we get a bounce off that at the beginning of the week. But that's what to watch for if we can hold this 250 level. If not, we're probably coming down to the point of the triangle. So that'd be around 225, and then we have added support lower at 200. So we do have the layer of support here between 200 and 250, but if you're bullish, you want it to bounce quickly, closing right on the 10-day moving average here. And it wasn't on the list, but you guys ask about it, and I do read every one of the comments that you post. I answer as many of them I can, time and travel permitted. But you ask about INDA. We do cover that every week in TradeFinder. We do the international markets on TradeFinder on Tuesdays at 1 p.m., but I thought I'd throw that in as a bonus here. I know we have a lot of viewers and subscribers from India. We had this triangle here. The breakout exceeded what you would have expected from the triangle. We had this wave 3. Now the algorithm has labeled this for purple, so it is confirmed wave 4. So is that it? Just under the 50% level? Are we going to head back down? We did get a little bit overbought here. Again, that separation from the 10-day moving average that doesn't last very long, and right back down towards the 10-day moving average, but we are above it. So we'll see if the wave 4 can mount any further move. We could go up as high as 61.8% and still keep this 5-wave pattern to the downside intact. But that's pretty volatile move there for a wave 4. But it did have the added bonus from the symmetrical triangle, which can sometimes give you these more volatile, more vertical breakouts. Again, it extended it a little bit, pulling back down. So the concern is that 4 has turned purple, and perhaps we're starting the wave 5 down. On the bullish side of things, though, you stayed above the 10-day moving average. Thanks as always for watching. Hope you liked the video. Have a wonderful weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.